What separates founders who build real businesses from those who just build the appearance of one?
Building a company, you have to tell a very compelling story. You have a very strong narrative, a reason for existing, for people to come and join, for investors to invest, for you to differentiate in the market.
Brandon Marshall, a two-time founder, made Forbes 30 under 30, spent 6 years building fund infrastructure for GPs and LPs, now leads fund strategy at StartX, Stanford's nonprofit accelerator. A Kauffman fellow and Stanford MBA, he's worked with hundreds of founders, and he keeps coming back to one question.
How do you focus your limited resources, your time and energy as much as possible to make that feedback loop go as fast as possible, to create progress, to compound into something where you actually have a business? There is a first component of this, which is really understanding, people call it founder market fit. The more aligned that is, the easier your job becomes as a founder, because you are naturally impassioned with this idea of, okay, I want to solve this problem because it's part of who I am. Most common mistake is for people to not go and learn as much as possible from their customers or potential customers from the market.
Because the moment you stop listening is the moment you start building the wrong thing.
If you lose sight of what is the core business and how this thing works, it's very easy to waste resources and confuse a very big fire for a very big business. You are building yourself a home or a prison, depending on how you build your company and who you build it for. The founders that have gone on to build decacorn companies, they are very clear on what business they're in.
In the age of AI, one advantage still can be replicated.
One common thing for a founder's job is to turn ambiguity into job description so that other people can do their job.
If you actually figure out your fingerprint of what makes you unique, it's very hard for any of these companies to replicate that because you have your own fingerprint, so to speak.
I'm Jim. As a founder myself, I learned something about this journey. The best way to build a startup is not to read a manual, but to learn from your fellow founder's story. Before we dive in, I have a small favor to ask from you. If you find value in conversations in this channel, please hit subscribe button and turn on notifications. It helps us keep the mission going. And this will be the only favor I will ever ask of you. Please subscribe and turn on notification so you never miss the next one.
Hey Brandon, so excited to chat with you again. We have been talking a lot in the StartX and in the previous conversation. It's the first time we're in the Founder Code podcast and talking. Thank you and welcome to the Founder Code.
Thanks for having me. You're always doing wonderful things for the community of founders and really excited to be here.
Thank you. I would like to start with your early days. And you have incredible stories. I heard you're selling lemonades in a celebrity neighborhood.
Yeah, so we're going way back. Yeah, I mean, growing up, there was a lot of the typical childhood stuff and things that you'd see that you entrepreneurs typically do, which is they try to start little businesses. I grew up in Los Angeles in a place called Malibu, which has a lot of people who are in the entertainment business, so a lot of celebrities. And so I would be selling my lemonade to folks like Janet Jackson, or rather her security guards, or like David Duchovny, or just kind of like these funny characters that you would see on television. So they're just kind of funny stories that were tied to that. And same with the car wash business that I had, where, I'm just washing these different people's cars. But the entrepreneur aspect was, kind of a highlight or a common thread. So yeah, it was a funny place growing up, but some of the stuff is familiar in terms of being an entrepreneur as a kid.
Yeah. How does growing up in a celebrity neighborhood affect your entrepreneurial journey?
Yeah, I think there's a real power of telling a story in Hollywood. I mean, that is what it does really well. And then there's characters who play that story, which are the actors and how they fit into that. And so I saw a lot of people playing those roles. It is I'd say a different kind of culture than San Francisco in the sense that I won't say less curious, but it's less curious about what's behind the veil, so to speak. So I think in terms of the story and how we live in these stories and the roles that people play, that was really powerful and stuck with me. Building a company, you have to tell a very compelling story. You have to have a very strong narrative, a reason for existing, for people to come and join, for investors to invest, for you to differentiate in the market. So I think one of the biggest parts of my childhood was understanding that firsthand.
Yeah. You mentioned a great point about telling the story and also narrative, because I also, like, a lot of people start to realize that, like, that's very, very important for building startup as well. Like, how do you control your narrative? How to create tell a good story of your business and the vision ahead? Like you mentioned, it used to be more a thing of Hollywood, but I think it's starting getting to the Silicon Valley as well.
Absolutely. I mean, I think as humanity is run on stories and narratives. I certainly see the world that way. With a company, you're starting with trying to solve a problem, right? On a very basic level. Hopefully, if that's valuable to the market, you get paid for that and you have a business. The story, when you're just as your sole founder, and then you go find other founders, or you start building this thing, has to begin there, and your view of the world and what the future looks like. So you need to function in being a storyteller from day one, both to convince yourself that something is valuable that doesn't yet exist in the world, but also to convince others. So I think it's inherent in the job, so to speak.
I think what you mentioned about reminds me an interview Jensen Huang had a couple of days ago. He mentioned about he's basically shaping the belief system of people around him, his employee, his investors, his partners. By the time when he's in the boardroom or he's doing something, everyone will feel so obvious. That is the thing they should do, but he didn't work beforehand. He called it shaping the belief system of people around him, but I think it's similar to what he mentioned about the storytelling.
Absolutely. I think we can definitely go. I love going down the philosophical aspects of building companies and just life. So I'm happy to talk about this as much as you'd like. You are building a belief system. Your culture is a belief system. You're trying to build an environment where people can be their most productive and find the right people for that. I think having the belief system before people believe, there is a process that happens. And we've talked about this at StartX and some of the exercises that we've done with this process of how do you build your fire.
Yes.
And you have, again, a vision, a story around this big fire that you're going to build.
Right.
But it starts with that first match that you're trying to kindle. And so there's a process of building that over and over again. I'd say one of the most important things that is very difficult, it sounds very simple, but when you build the story, you are forming a sense of reality and you're trying to bring people into that. And there is this trade-off between being dogmatic about your story and holding that ground and not breaking no matter what, and also evolving with what you find along the way and iterating with the market or the customers or something is happening, and you have to incorporate that reality into your story. And so there's this balance between holding this as a belief system, as a narrative, as this is what the future looks like, and also being very pragmatic about how that narrative can adapt to everything it learns along the way and incorporate that without losing its essence and thesis and vision.
Exactly. Yeah. So, it's like evolving. It's a life system.
Yes. So you're building a belief system in a world that's not black and white, but you're trying to create that black and white certainty. And how do you balance that? And that's the best leaders, the best founders, the best storytellers are able to do that.
You briefly mentioned about that, the build the file framework. And we talked in the startup, I think this is one of most insightful framework I have heard about in startup building. Our audiences might not be familiar with that. Would you mind sharing more about that framework?
Yeah, absolutely. So there's a lot of people talk about obsessing over customers, executing really quickly, being very focused. And I've been a founder twice. I sold my last company last year. I've gone through that process. I've been a mentor and advisor and judge at StartX for over a decade. So I've worked with hundreds of founders. And so the pattern that shows up again and again is this basically you have a feedback loop. And the question is, and we'll walk through that, but the question is, how do you focus your limited resources, your time and energy as much as possible to make that feedback loop go as fast as possible, to create progress, to compound into something where you actually have a business? And so I think a fire is a great analogy, because what I see and I've done firsthand is, a couple, I mean, plenty of mistakes. We'll start with what you should do, and then we can talk about the other things. But when you start a fire, you're starting with very small bits. So this is your initial thesis. These are when you're first talking to your customers, and you light a match. You're trying to figure out if there's a fit, if you can actually build something here. And maybe you get lucky in that first strike of the match and the thing starts going and you have your fire and everything's great. More often than not, you need to iterate. Something went wrong. And so the mistake people can make is just starting a new fire, kind of throwing everything out, not learning, really understanding what the market is saying, or ignoring what the market is saying. Being overly stubborn on why the fire didn't start. So again, that's the vision with certainty, and then saying, well, the market told me something, but the market's wrong. The customers are wrong. And so basically not incorporating what you're learning into the next time you try to light that match. And so one aspect is, how do you iterate through that? Every time you light the match, you're trying to start this fire in a very focused way. You want to learn from that as much as you can to inform, okay, maybe we should use different pieces, meaning we should talk to different customers. Maybe we should assemble them differently. Maybe we should bring in a different kind of match, what have you. I mean, we can bring this analogy. We're trying to keep it very simple. But the idea is that you have this very focused learning process, and you're only focused on starting the fire. Another mistake people can make is putting a lot of gasoline on it, thinking that they've started a fire when it goes really big, which is, the venture game. And we'll get to that in a moment as well. So once you have that fire and you're trying to, it's lit, the next stage is really focusing on why that happened. Why was it working? What are the insights that you just built around that? Take those insights and inform, what do you do next with making that fire bigger? So as that grows and grows, it can be difficult and distracting, because you have your core thing of what's going and what's working, but then you see all these other things that could work. And so you can get very distracted to be, well, I can build 10 fires right now instead of just focusing on this one. And the discipline that you want is to just keep focusing on that one thing and to compound that one thing, because that becomes your advantage. And that's what will continue to grow. So we can keep talking about this as the analogy. I think the big takeaway from it is this idea that you are starting with a very focused process, a very small, intentionally small process, and you are trying to be very disciplined about how you learn about your process of starting that, very focused in expanding on what is the insights that you're getting from each cycle to make that fire bigger over time. And really to get that to a critical scale before you even consider starting another fire. And those would be kind of the highlights of that.
It's super insightful. And in fact, after I heard you talk about this framework like a half a year ago, I couldn't forgot about it. I even just went for a camping trip, trying to light the campfire, just recalling what you talk about. And also having this a visual analogy is incredibly helpful in the startup building processes. And I will put in the ways it's not just ink light the campfire. It's actually in very windy days. Mm-hmm. And oftentimes when I do my startup, I realize similar things when you build a little bit momentum, it's all about feedback, how fast you can build the feedback. And sometimes you build a little bit of feedback, the fire seems to be ongoing. And if you get distracted, it's I can do other things. And then it's actually another wind coming through. blows your fire.
Yeah.
And then when something's working, the thing is how to double down on the feedback and getting it bigger. And also there's a lot of like try and learn. One thing I learned is actually that metaphor I use is I try to incline the whole wood first. It doesn't work.
Yeah.
It doesn't work because it's such a big vision.
Yeah.
And it requires a lot of like the initial file to burn it, so it doesn't work. But you couldn't forget about it. You have to grab some leaves and grab some like other things to burn a small file, make it work.
Yeah.
Put in beliefs, protect it, make it a small file to be a little bit bigger, big enough so they can ignite the bigger wood.
Yeah.
And when the bigger wood is on, you are kind of safer.
Yeah.
But the whole process, like maybe you try once, this is not a good initial material, then try a different one. There's a lot of experimentations needed on that.
Absolutely. And the as you focus on it, you'll have the idea with you're feeding it more and more. And so the wood aspect, that starts getting into the investor aspect. And so the other insight from the fire is that you want to feed your business. You want to feed the business that's serving the market, and that you have insights that you've been building in a very focused way. So you understand how your fire works, why it's burning, why it should grow, or how it's growing. And then it's much easier to bring in capital to give you more fuel to grow that. Because you have those insights that you've learned and gone through all those reps. So your clarity on how this thing works. Because once you bring in all that extra wood, or eventually when you get to the growth stage, gasoline, if you want to say that, to really make it go big, if you lose sight of what is the core business and how this thing works, it's very easy to waste resources and confuse a very big fire for a very big business.
It's also very resonating. Like you put a gasoline or lightning oil on this, you're like, pooh, suddenly there's a big fire. It's easy. The problem for that is that it just like ignite the whole wood on the surface.
Yeah.
It doesn't create enough like density or intensities that can break into the internal part, which I think is about, do you really have a product that solves a particular problems or for particular audiences? Like it is better to solve like the problem for a subset of audiences, but do it very well than trying to build a lot of nice to have solution for everyone.
Yeah. I mean, there's different symptoms of this. You could say, as long as you raise more and more money, it feels like you have a big business. If you acquire really bad customers, but you have a lot of customers in the door, it feels like a really big business. And so again, it just goes into, I'm talking about a lot of the signals of what to watch out for. But the fundamentals again, and just kind of rehashing this, is that process of a feedback loop, learning as much as possible in a very focused way and growing and extrapolating that as fast as possible. And then that role of how venture capital or investors can come in to support that growth. I think is the other piece.
Since we're talking about this framework and which has been very useful, I actually would like to dive deeper a little bit on that.
Yeah.
And especially for a lot of our audiences, they are in the very beginning part of this journey. And it's just like garden wood. Maybe some of them even don't garden wood yet, right? And then they want to figure out a way to ignite one part of that, like get into particular segments or identify the problems. It worth them to spend all the resources doing that. How would you approach this?
Yeah. I think the most common mistake, because I think it's just uncomfortable, is for people to not go and learn as much as possible from their customers or potential customers from the market. So you have a lot of smart people coming from Stanford who, and outside of Stanford, but I'm just saying kind of the ecosystem of StartX that I see a lot of, who have not done the discomfort of going and talking to 100 potential customers and users, to not get kind of the clipboard version of sketching out things before you build something, to really get out. You might have an initial thesis, but to get an understanding of like, how does this actually work? How could this work? Versus, hey, I have this really cool, neat idea that I thought of myself. The world's going to want this. That might be the case, but you save yourself a lot of time and headache by going and validating that in a very direct way. And so I think when people are first starting out, there is a first component of this, which is really understanding what people call it founder market fit. Mm-hmm. What is the unique attributes of this person as a founder, their history, their insights, their core competencies, and how does that map to this problem that they see in the world that they want to solve? And then that's the first part. That's the soul searching aspect. Mm-hmm. And the more aligned that is, the easier your job becomes as a founder, because you are naturally impassioned with this idea of, okay, I want to solve this problem because it's part of who I am. And you want that to be authentic, not just for the investors, but for your own sake.
Mm-hmm. Yeah.
So that helps narrow the field of what you might work on if you want to start something. And then the second piece is what we just talked about, the most common thing, which is just then really get out there and talk to people and start iterating.
What I have talked about is that you kind of do this initial search process in both form, your internal signal, but very importantly, external signal. The internal is more kind of like understand yourself. What is your true passion? Like ask, if I spend 10 years of my life in this problem, would I feel burned out or would I feel happy?
Yeah.
Right? Generally, that will be a very broad, like would you like more to improve productivity of the people, or would you like to make people more happy or fun? I think it's a very broad area. That is for the internal signal. And then prioritize and focus on talking to people that you want to serve for and understand their true pains. Related to that, another question I have is that a lot of founders, they heard about advices, but I want to talk to customers. But oftentimes, there's a lot of noise happening. Like if you talk to people and 100 people is oftentimes like, be a lot of conversation. You feel like, there's a lot of information. How do people turn those conversations into actually a plan or strategy to vetting ideas?
Sure. So there's certainly an art to doing that. And there's, when we talk about the face-to-face of talking to people, knowing customers, there's obviously a digital way of doing that as well. I mean, there's different forms, but the idea is that you have enough of a window in interaction with that world that if you talk to 100 people, there's something emotive that comes back around. If they have a pain point, it's not hand wavy. It's, I have a real pain point, a headache, or I'm really stuck, or there's a signal that comes from that. Mm-hmm. And so part of the learning process, and there's so much literature, videos, what have you about this, is and part of it just comes from practice. Don't assume that the first time you do a round of interviews, if you're first getting started, that you're going to be naturally good at that, or that you're going to catch everything. I would really try to leverage all these amazing tools that we have with the transcripts and there's stuff that even reads emotions and voices that are really interesting to help assist and provide leverage for the process. But I would again take that as like you are also going on this first chapter where you're trying to learn how to do that well. There should be an insight that comes, and we're using the 100 as an example. There are probably 10 to 20 folks that had something that felt like a real headache. And it's okay to just focus on those 20. So, this is a small example of, you want to find the hottest part of the flame. Like you don't need to solve for all 100. What you wanted to do was a clear signal. And if they said something that you would absolutely hate doing as a founder, as a person, and hate building a company that way, I wouldn't force yourself into that box, because you are building yourself a home or a prison, depending on how you build your company and who you build it for. So you want to make sure that there's some level of alignment or coherence between what you're building or what the problem you're solving and who you are. So I don't know, I'm curious your take, if you're seeing folks who get stuck in the process, or people talking about getting stuck when they go and speak to people in the interview, because I think there's a bit of a practice, but typically there's some kind of emotion that's coming up with those users that provide the signal, or if it's in that first prototype of what they're actually building to help solve that issue. I don't know if there's either one of those, or you're seeing pain points, or if that's just something they're learning about across the board.
I think after I heard your framework, I actually put it into practice and doing a lot of this. One thing I learned about is this emotion thing you talk about. I tried all these transcription tools and I have tried it at one point, trying to record all the videos and store in my like a Google Drive and have people analyzing. But then I realized this is the part where AI cannot do very well yet. Because it's not about summarizing and what they say, and in fact, you should forget what they say because they often will point in the wrong direction. Once I found very useful is two things are very useful. One is the emotions, which the person when they talking, whether they generally feels the pain, which you can see from their expression. And I found that usually in-person talk is way much better than video talk. The message usually doesn't convey a lot of these things. But when you talk to a person, you will say that there's a lot of time people like they try to be nice with you, and it was like,
yes,
I will brainstorm idea.
Yeah.
What if you can do this? I will use it, and then I will just like read their gesture, and it's like they just pretend to be nice, and I offer them value before they were trying to offer help, which is good, but then that's not the useful. The one that is more useful is like this one. The person is obviously frustrated.
Yeah,
something like that. Then I'm very, very interested in how the story, what is the reason for that. That's one thing. The second thing I found is useful is that I realized there's a distinction between discovery and sales. In the sales, you are trying to convince them your solution is kind of the best solution. So you want to like actually proactively follow up after the conversation, all this thing. But discovery actually sometimes want to just settle a little bit, like to say, is there any push to you? Did the person actually follow up with you? Afterward, something like that. It's very subtle.
No,
I
think those are two really important insights for people to understand in terms of the art of the interview or the art of discovery and going to those users or initial users or any users in the process. The first thing you said, people want to be nice, right? They don't want to take on the risk of being brutally honest, or they might be, if you're talking to a person in a company, right? The idea they don't understand the founder mindset that we're crazy enough, but the way that there's a whole weird relationship of like it doesn't benefit them to take the risk of being brutally honest. So there's a first piece of how do you create the comfort where you start to get them to open up. And I think that's really important. Knowing that the starting point is typically that they're going to not give you great information, or they're certainly going to sugarcoat things or just not reveal things. And so you want to understand, how do you create a safe environment, a curious conversation where you start to hear. The second thing you said, which is very much tied to that, and a mistake that people do all the time, which is directing the conversation towards leading questions, basically, I think is what lawyers might call it, to trying to lead them towards the solution that you haven't showed them yet, but that's what you spent all this time building. And so the discovery piece of really being open, they could take you in something totally different and new. That is gold for you. Those are the insights that you want. Those are the signals that you want of where the actual pain points are for this person. And it can be very uncomfortable if that starts taking you off course of your business that you are envisioning, or the solution that you have. And to really just hold that space and let that information come in, that it helps you make sure that you're not wasting your time on what you do next with your company. But it can be very uncomfortable to do that. So I think those 2 points you brought up are really critical for people to understand when they're getting that user feedback.
Exactly. And related to that, I can feel that uncomfortable because I have many times when I'm having conversations with users and they started talking, I have some idea what we should talk about. And when they started talking about this completely different direction, as if I build for that direction, I need to do a hard pivot. There's many times in my mind, like I would say, should I direct the conversation a bit? But later I realized that if I direct, I lose what I hope to get. Like, of course, like I don't have to like do what they say. But if I don't get the data, I would never know what is the word on this. Another thing I realized is that I realized that we have to forget the conversation after we finish a user discovery call. I once had a habit of getting all the transcript, and then I used some tools, like for example, product board or some tools, and I just highlight each of the sentences and say, hey, this is sentences. And then I will aggregate, oh, this sentence has been said 5 times.
Yeah.
And that's what we should do. And at one point, I even handed over to my product people to do that. And then later I realized that was a mistake, because if we do that approach, we're basically be too literal on taking what a user say.
Yeah.
And also another thing is that we also couldn't completely delegate this, because even a good product manager, they are not in the founder, they don't have the whole context. So they were operating in a very literal way. They were basically highlighting the 5 and, oh, this should be what we build on the next month. And then now you get a kind of like a suggested action plan. And that sounds completely right. Everything is backed by 2 quotes from the users, but when executing this, it doesn't feel right.
Yeah. So you're touching on a lot of points. I mean, we got to go faster. When I'm talking to other founders, there's a weird world that we live in, and this nuance of our biases, our inherent biases as people. We don't want to do things that are uncomfortable. It can feel like a bunch of homework. Okay, we just had this 2-hour conversation, but actually that was just the data collection phase. Now you actually have to make sense of that data, and that's a harder, nuanced way of where was the actual signal in that. And I think the tools can be helpful in getting that data, but interpreting that, I think, for the large part, you want to go and go through that yourself. So I think that's really important. The other thing that's really important you talk about, people want to do something that they know how to do. And so if you give that data or anything to a product manager, the product manager is going to go with that lens, and how do they then start doing the job that they know how to do. And I think being able to sit with the ambiguity of not knowing what to do with that information and staying curious in that learn mode is really, really important. To then figure out, okay, how do we want to incorporate this into the stuff we do know how to do? And if there are things that we need to do that we haven't figured out, let's figure out a plan to go after that as well. But I think that segmentation is really important.
Since we're talking about this framework on that, after we identify the initial directions, and there's another part of how to make the file bigger.
Sure. Yeah. It keeps going.
Yeah, it keeps going.
Yeah.
What would be your thoughts on those?
So I think, the famous 0 to 1 of figuring stuff out, and that learning cycle, not knowing what the answers are. Founders are predisposed to figuring that out, in part because that's the survival of the business. If they don't figure it out, they don't have a business. And so there's an incentive for them to do that. Mm-hmm. As you build the fire and you're figuring that out, you get to a point where you're starting to operationalize it, meaning that you know how it works, you know how you're serving your customers, you know how your product, you have that initial product market fit, let's call it, starting to pull you, the growth is starting to pull you, such that you need more resources to keep up with the demand that you have. That's the scenario you want to be in. So as that you're getting pulled, and as you've gone through these learning feedback loops, so you have these really clear insights for why that's happening, you can start to operationalize, meaning you can start writing the instructions, the skills that traditionally had become job descriptions, but now we have different forms of intelligence that we can start outsourcing that to, or buying computer tokens for, to support. But the operationalize is saying that we know, we're going to take to feed this fire and to serve the market. These are the 10 things that we need to do as a job. So these 10 tasks or this process, I'm going to create an actual job description for. So that's the operationalize. And so now you have this leverage point where you're free to think about how you're going to grow to the next phase, but you have this foundation that is basically taking the insights and lessons, all that ambiguity of what to do. Now people know what they need to do. They can execute that. And then you can go to this next phase. Okay, now I need to grow this even further. And there's other things that you'll need to figure out. How do you, capture more of the market? Plenty of things we could talk about there. But that's, and thinking about the FIRE thing, the operationalized piece is the next piece of that.
You put in you put in great ways about the operationalize the things. And one thing, it actually also reminds me one thing about being a startup founder is all about creating jobs. It's job creation process, you put it in a way, is a lot of times when how about founders, they say, oh, you might be like a builders or might be business operators like that. But I think fundamentally, one common thing for a founder's job is to turn ambiguity into job description so that other people can do their job. Like if other, like most of the people in the society, they will like perform their job. They will like be structures, their expectation, what they should do. But for founders, their job is to create the jobs.
Yes.
And which you put in ways that after they finish this initial discovery process and keep doing that, they'll get a lot of learnings and insights. And then they have to do the work to say, what other things needs to be done in order to build upon, to amplify the fires? Do we need builders? Do we need an operator? Do we need growth marketers?
Yeah.
And then need to do a breakdown of that into some sort of strategy or skills or job description.
What I call these tests.
Tests?
In terms of people can get straight A's their entire student career. Academic career, and the test that they got an A on was given to them. They had structure. Here's the syllabus. Here's what we're going to learn, and then we're going to measure how well you've learned that information. There is no test other than the market is there, and you have to figure out, how do you build enough value? How do you build something of value that the market's going to tell you? A lot of them are too nice to tell you that what you have isn't great or it doesn't solve their problems or whatever. You have to go through this process. And it's not clear how to get there. There's a framework. We're talking about these frameworks today, but that learning loop of how do you learn? What do you learn? The nuance, all this kind of art of aspects of things, that's why this is so hard. So what I'm talking about with the test is that when you operationalize something, you are building a test for your employees or whatever to get an A on. You're building criteria of whether somebody did a good or bad job. One of the hardest things about a founder, building a business and the founder mindset is you build something and you give it to 100 users and it's not clear if you did a good job or not. You know what you want to happen. You want the 100 to go crazy and then another 1,000 to come in and you want it to go, but like, why is it not working? And so it's the discomfort and the bias is that you'll do things that you're comfortable with. You'll work 100-hour work weeks thinking that you did great work because, wow, you're cranking so hard. But did you work on the right thing? Were you writing or working on the right test? And so that there's so much ambiguity in that first 0 to 1 phase. And then you operationalize it into something that's more discrete that people can actually get an A on. That there's a different mindset there and challenge that I think it can be very confusing for folks. But I also think it's really important that people who are figuring that part out understand it's best to bring on a team member or build out your team when there's clear things, clear jobs to be done. And if it's, I haven't figured it out and we need to figure this out, or we're going to run out of time, whatever, the freaking out piece of this, just bringing more people in to try to kind of throw bodies at the problem usually doesn't lead to a good outcome because you're not actually building a faster way of learning about how to make the market or how to meet the market with your product. So you're trying to accelerate a process that's not quite working. And the people that you bring on might need a test that they can get an A on when it doesn't yet exist. So I think there's a lot there with that process of have you figured it out? Have you built the insight? And can you actually, write that down of what those insights are so that becomes a work product?
I think you mentioned a great point that is startup is a very interesting. It's a very interesting phenomenon in startup is that it's not necessarily have more people, you get it faster. Like otherwise, like a startup will never win because there's always big company with 100,000 employees over there. And startup is kind of a structure. And the founders are creating that structure. And the jobs that you mentioned about is that created one by one. In the early times, maybe you learn something and realize, oh, they need some initial solutions. Oh, engineering jobs get created. Yeah. And later they realize, oh, they actually need a product that has more intuitive results, like the intuitive user interaction. Oh, your UX design job is created. And it's actually created sequential. Yeah. And you create a job first, and then you figure out how to fill those jobs and by hiring and building the team on that.
Yeah.
I would love to also learn about the next phases, like after you figure out the jobs. Yeah. And how do you actually get the teams, and how do you actually grow the teams?
Yeah. I mean, you get to the point where, this is where capital is really supposed to help accelerate. So as you are growing as a business, as you're building that foundation, as you're getting pulled, meaning more demand than you can accommodate by the market to go somewhere, you then start bringing in capital to accelerate that process, or to meet that demand, and also to help build for the demand there's kind of a linear, or it could be exponential, but a clear path to what the future will look like now that you have these insights. If these things are true, if we figured out this piece with the market and the trends that we're seeing, we need to be here in 5 years. To be here in 5 years, we need X amount of dollars. This is the optimal relationship that you have with investors, and what you're building towards. And so that process just goes faster and faster. As you get to enough scale, you start thinking broadly about, you can think about other complementary fires or things that are building off a core competency that you have in a business. But at that point, it's the old fire, the existing fire, the foundational one is really just, it's a well-run machine, right? It doesn't need you can take on the risk of exploring these new categories. But I think the process is, again, you just have this feedback loop and you're growing that, and there are different components that you have, including the investor capital, that helps accelerate that. But ultimately, what this always comes down to, what I see is most successful, the founders that have gone on to build decacorn companies, they are very clear on what business they're in. They understand there's certainly a vision to what they're building, but there's a core insight in terms of how the engine that they have to get them there, and that they built that validation with the market. And then you built this team and competency and IP around. That's your foundation of how you're going to navigate there.
You mentioned actually a great point about when to raise, right? Yeah. And as a common belief among founders, it's like, oh, it's good to have money, but not necessarily. Yeah. Only when you reach to a certain stage of your journey, capital will help you. In particular, like you mentioned, that only when you have already created the jobs, but you want to fill their jobs faster and you want to replicate their jobs so you get more momentum so you can get to X by Y date. Yep. Well, that is the time when capital will be helpful. And in fact, you need to know that so you can create a plan to know how much capital you need to raise. Yeah.
And I think so the fundraising, and there's different environments for fundraising. And we're going to focus on specifically a unique type of investment or fundraising for this, which is venture capital. So the first rule of a business and as a founder is don't run out of money, right? You don't want to do that because then you're out of the game. And so it can be tempting to feel like, okay, well, I can get this lifeline for raising capital. And there are a couple of things where I see mistakes there. If you go and raise a bunch of capital and you don't know what you're going to do with that money, or you haven't figured that out, you are probably going to make some pretty expensive mistakes, right? You might build a big team before you're ready, before, again, those jobs to be done, the tests are written, the insights are developed. And you also put yourself in a position where, there's an expectation to go and increase the value of that business. in a very short period of time. You have 18 months, let's say. And even the cycles that we're in now, we're seeing like 12 months. So, if you go in and have an idea and you say, okay, well, now I have a $10, $20 million business because I went and raised a couple $1 million on that valuation, that's all fine. But you should have a very clear insight in terms of having spoken to the market, built an initial product, or some kind of core insight that you can leverage. And why you're using that capital is that you're constrained from realizing that insight, from testing that insight, from going to serving the market in some way. And so the analogy I'll give is like, sometimes I see founders that they're going out and they're asking for lunch money. They don't know quite, they haven't figured it out. They know that they don't want to go get a real job. And they know that there's some people that are in Silicon Valley around the world that are going and raising outrageous sums of money for, it seems like, random ideas. And that if they just had the money, that would solve a lot of problems. And so where that goes is, you can probably wrangle up enough money to go and raise it, which will create the problems that we just talked about. But the other thing is you stop building for the customer, your first customer, which is the market. Mm-hmm. And so let's say that you have a great reputation because you worked at X company and you have a great network for whatever reason with investors. And you have this insight, this idea that you had in the middle of the night or in the shower or going on a run. That's your company. And you're like, I don't want to go talk to 100 customers. I want to go hire people because I know what this is. Like the 100 customers, the market doesn't understand. You kind of go through that process. There's no validation of what you're doing in terms of a thesis, right? And so you can trade a name to go and get capital, but it becomes very expensive to then run those tests because you're probably going to pivot a bunch of different times. And the difference between feeling comfortable in that immediate testing period versus the discomfort of you just spent a lot of very expensive money and you don't have a bigger business to go raise on, puts you in a very weak position. And so going and living off of ramen for a bit and doing whatever it takes to bootstrap and not raise the capital until it's very clear where you're going to put that money to actually accelerate the business enables you to build a much larger business consistently than one that's not doing that. So that's the idea.
So raising that, I think you also touched on one point was about the relationship between founder and investors, right? So there will be part of very good one relation with you get a capital and capital partner. They help you to fill the jobs and win the market. But oftentimes there's also other dynamics happening. Like one thing you mentioned about is that there's always the expectation that they're going to be creating values within a certain time range, like 18 months or 12 months. And that dynamics also will impact the decision the founder need to make in all sorts of ways.
Yeah, there's I think you are with investors, you're building a very long-term relationship. Investors are not operators. They're not going to be in your business. They shouldn't be, because you and the team are the ones that are spending all the time on product and all the time with the customers, right? So the investor being the kind of secondary customer to help support your business. That's what they're there for. And the way that venture investors are supporting the business, they have their own game they're playing, which is this power law game. Mm-hmm. With just looking at, less than 5% now, closer to 1% of companies make up all the returns in the venture capital investment space. And so there's an assumption that the large majority, virtually all the companies will fail from a venture perspective. And so there's this balance between building this partnership of what you're trying to do as a founder and the vision you're trying to accomplish, and having capital that understands what you're building towards, and the incentives and game that the venture investor is playing. And so where I see the most success is when the founder focuses on the customer and creates that very tight feedback loop, so they compound insights that usually leads to market validation and product market fit. It's often also the case that the there isn't product market fit, but at the end of that runway of what they spent the money on, they've shown they can execute very efficiently on learning very quickly. And they have a multi-million-dollar education that gives them a perspective of what to do next, that differentiates them from everyone else. That builds trust with a venture investor because they still can take bets on what the future might look like on the future for the business. So I think that investor-founder relationship is really critical and important. The founder coming in knowing when they again are getting pulled by the market like we've talked about, and they have insights that they want to expand on, is really important to build that great relationship with the investor and know that they're in a different game, that they're a different player in the game with different incentives. And so don't take it personally if you have been kind of marked as like, one of the 90+% of companies that are not going to make it. They have their own problems of that basically they need to spend times with whoever they think their winners are going to be, because it's so important for that to make up their portfolio. So those are the dynamics at play. It's less of founders are good, venture investors are bad. It's more of just be very clear on like how this works and the role that you need to play.
And like you mentioned, that the whole startup ecosystem have different jobs on its own as well. Like the founder is basically, you have your insight or vision of the future, and you figure out a way to build on this file and ignite it, right?
Yeah.
You have a way to ignite. And VC is different. They are betting on totally different. They just make sure everyone gets their own resources, the materials, and there's a right allocation of resources in the whole market.
Yeah. And the game is, how do you make sure you're in on the next Anthropic, right? So there's all sorts of interesting dynamics there. But yeah, there are different roles to play, and I think that's important.
Yeah, exactly. Yeah. And let's continue our journey. So imagine that we have created a job description, we have gathered the capital, we have filling the team, and there's a strong market pool coming. And oftentimes the founder will realize they enter the growth stages. How they can grow as fast as possible. And oftentimes this will become a competitive market. Like when the last stages, like I think the last year, the AI coding space, there will be like tons of competitors in the spaces. What would be your advice for founders in those stages? Yeah,
I think so. First, on the competitive aspect, especially in the early stages and when you're understanding what's going on with the business, you want to be informed with how the market's evolving, how other people are solving stuff, just so you become a master of the market, but really not get distracted. Don't go and raise money because somebody else raised necessarily. Don't try to replicate what they're doing, because you're not, again, you have to be customer obsessed, right? Obsessed with who actually is going to be buying your product. And so if you have that obsession and understand your customer better than anyone, you will typically win in that market as long as you're executing well. You can overlay some competitive intelligence, but I also see founders make a mistake of worrying a lot about their competition or trying to replicate certain things versus just focusing on the core value they can bring to the market. So once you get to the growth stage, this is where you're putting gasoline or jet fuel or what have you, whatever analogy you want to use, onto this fire. It's really growing. And it's, at that point, it's really a land grab. So how do you replicate playbooks? How do you go into regional or international expansion? I'd say for the purpose of what we're talking about with the early stage, and that's really my focus, especially at StartX, call it the pre-seed and seed to the Series A. It's building to that launch pad of what they do in the A to IPO. So the game that's played is different. You've really figured out a lot of pieces of your business or the core competencies. You might, with this market we have today, might have to pivot in things. But I don't have a lot of advice on that growth stage. I haven't taken the company IPO. I've sold a business. We did well there, but I haven't seen a lot of like let's call it 500 to 1,000 plus employees.
Yeah, thanks for sharing. You mentioned about one thing, which is like focus on the value that you create, focus on your customers.
Yeah.
And a lot of times, like the competition will go away if you have the focus in delivering the best product. Related to that, I do want to touch one point, which a lot of founders are observing now. It could be a short period of thing, but it could be a trend, is that when founders focus on their own segment of customers, they got some insights, and then the giants coming, like the model companies coming. So that we see a lot of trend, which is like there is a very healthy business, and then cloud release a skill.
Yeah.
Or someone build up on top of cloud skills. They suddenly realize, you can do the same thing with Anthropic.
Yeah.
And then the company who originally found this will lose steam a little bit. Even as a conversation about where the cursor will still be a thing.
Yeah.
That could be one example. Cursor basically got insights that the AI models can be very useful for coding flow.
Mm-hmm.
And then everyone started to switch over to cloud code. And then there's a question here, like whether cursor still is a thing. So curious your thoughts on that.
Yeah, I mean, I think this is very much a frontier of figuring out we have these new capabilities. What are the implications of that? What's the new paradigm we're going to operate in? And what is that going to look like? There are a lot of questions there. I don't know the answers to that. I can tell you my personal approach and my view that I'm focused on is around basically the fingerprint of like who we are. And this idea that you have your own story and persona and talents. I have mine. If we work together as one team, we collectively would have our unique fingerprint of what we're capable of doing. And that's similar to the founder market fit we were talking about early. You want to really be coherent and clear on like what that actually is. And so that kind of forms your compass. Mm-hmm. Then the question is, okay, how can AI provide the optimal amount of leverage for my uniqueness of what I can do and what I get excited about? And I think it's safe to see an assumption work out where you assume that leverage is only going to increase in the immediate term. So you can build these skills and faculties underneath and amplify something that's unique. I would say that that is different. Historically, there was this innovator's dilemma that startups can work faster and do something that was kind of obvious, Dropbox or somebody doing Google Drive, something where it's like, oh, that's obvious. I think where this is going is more human in terms of as an entrepreneur or founder. And it's more of like understanding, like, how do you broadcast your value to the world? How do you realize that value with this leverage of these tools? How do you then distribute that value across these various networks to find your audience? And then how do you capture that value from some kind of business model to bring that in? And that can be a very small team, in part because what these models are enabling are effectively our ability to write them tests that they can get an A on, so to speak, that would function like an employee. Mm-hmm. And so, for a company that's going to go and raise $10 million, or they're going to raise their first seed round, a long time ago, it was raising money to go buy servers to get the actual compute of some sort so you can start building something. Then, the last cycle was all about you're raising to hire the best engineers to go and build something. So you're hiring people, but that's where the budget was going. You raise a couple $1 million, you might spend a little bit on office space, if at all, and the rest was just going to people. And then now it's more of like, okay, well, now it's going to compute, it's going to tokens. And so I think then to answer your question, if you actually figure out your fingerprint of what makes you unique, it's very hard, I think, for two reasons. It's very hard for Anthropic, any of these companies to replicate that, because you have your own fingerprint, so to speak. But also the thing you're looking at is probably relatively niche to what they need to solve for at the scale that they're at. They have built such a tremendous fire that they're basically are going after everything in the world and reshaping what the global economy is going to look like. There needs to be an industry and economy that exists on top of that. And so I think that that's the frontier. We don't know exactly what that looks like. But I think that for founders or building businesses, the more that you understand that unique insight, and I'm not just talking about like consumer apps or things, I'm talking about like really core insights that you can amplify as a human and what energizes you, that kind of fingerprint, and then how you distribute that to the market. I think that starts enough of a feedback loop and a fire that should accelerate as all these technologies come out and improve on a weekly or daily basis versus disrupt the business entirely or replace the business entirely. So I just argue that people who are chasing ideas that could easily become an app is probably not their true unique founder identity, I would argue, potentially.
Exactly.
We could debate that.
Exactly, yeah. Actually, what you mentioned is so interesting. The other day I have a great conversation with another experienced entrepreneurs. He took 2 companies IPO'd for that, but he gave me one analogy, which is like if you build an app that will eventually be installed by Anthropic OpenAI, it's more like pick up coins in front of like giants. They will just like steam over you sooner or later. I like the framework you mentioned about the fingerprint. And oftentimes that, because my understanding with fingerprint is that you actually need to understand about how, like, what is the uniqueness of you as a founder, and then by extensions, your team and the organization you are building. And nowadays, like it used to be, a good company can be built by one unique insight. You have Dropbox, okay, and there is this innovator's dilemma that will protect startup founders. So you can just need one unique insight to build a good business. But nowadays we are in a very interesting stages that the big companies will operate very fast with AI and we're in a new period. So if you only rely on one insight, it's not safe. It may give you like some protection for like half a year or something like that, but it's definitely not long-lasting. What you need is identify your fingerprint for yourself, for your organization, and be laser focused on those areas, and to eventually build the unique value that is impossible for Anthropic to take over on this.
Yes, I think, and so I think the challenge becomes both on an individual and a company level. How do you basically have to figure out your data model. So, I spent the time building the Brendan data model, all the information that I've had over the last, it's like 15 years of information, spending a lot of time figuring out what's the actual structure that then I'm going to put an intelligence layer, this compute underneath that to create a leverage point. But then to your point of you start with an insight of what I want to do. So that now I have this structured data, what's unique about me. And then I create these leverage points of doing something with that information very easily. So I remove that friction. But then it gets into that feedback loop thing we keep coming back to. Yeah. So I will do something based on an insight or desire or something I want to do. That's going to go to some version of a market. Mm-hmm. And then data is going to come back. If I build the system, and this is what we're talking about with Cloud, all this other stuff is going where this is going. If I build the system with an initial fingerprint and then the compounding of going to the market, bringing that insight, bringing that into my knowledge layer that then informs what I do next, I've then built a unlimited, or kind of the speed of that cycle goes up exponentially. Basically, I'm only limited by the cost of how much money I can spend on the compute for that, right? So I think that's, to answer your question on like the pivots or how this new technology comes out, I think, for me, that's the view of the future where we see the most value in ourselves and in our companies is that fingerprint aspect and that loop of how do we bring it to market and then learn from the market and bring it back to market with those insights.
Yeah, exactly. Yeah. Fingerprints and the feedback loop.
Yes.
That build on top of fingerprint.
Yeah.
Well said.
Thanks for watching part 1 of our interview. Don't forget to subscribe to our YouTube channel and turn on notifications so you never miss the next one.